This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Investor Connect is a 501c3 nonprofit dedicated to the education of investors and startups for fundraising. Please consider donating $100 to the program to help others in their investor and entrepreneur journey. You can find the donate button on the investorconnect.org website. Hello, this is Hall Martin with Investor Connect. Today we're here with Tim Cooley, Executive Director at Park City Angels and author of the Pitch Deck book. Park City's Angels are a group of 50 accredited investors located in Park City, Utah, who look to invest in promising opportunities that can produce significant shareholder returns. Tim, thank you for joining us.
Yeah, thanks for having me. Pretty stoked to chat with you.
Well, great. Well, tell us more about your background before joining Park City Angels.
Yeah, so I've had a kind of unconventional background, if you will. Out of high school, I joined the Marine Corps. I used to build jet engines. So you can see that's a little transition there. I ended up becoming an athletic trainer. I worked with the 49ers and the University of Utah, the University of Arizona, and a bunch of others. And so I was this clinician, and then I just didn't like it anymore. I ended up in the business world in the marketing side of things. After I started my first company, which I ended up selling a few years later, I ended up through a whole bunch of things, ended up in the accelerator space for a couple of years, worked with people to help them raise capital. And then I joined Park City Angels as the executive director, probably about 3.5 years ago.
Great. So what excites you right now?
Honestly, I really enjoy teaching, I love seeing new ideas, obviously. I think everyone does that. But I love when you can help a founder really present their business better, which is right. I wrote the Pitch Deck book. I really wanted people to learn how to present to angels. Back in the day, I was raising capital and I sucked at it. And so since I've been involved in it, I actually get to be on both sides of the equation. And I was like, man, if just people said this one thing, the likelihood of getting funded, or at least going to the next meeting, is, substantial. So,
well, great.
That's how it worked out.
Well, tell us more about your group, the Park City Angels.
Yeah, absolutely. So Park City Angels started in about 2007. So I've been going strong since then. Started off kind of as a division to help spur growth in medical devices in Utah, and then quickly transitioned into this early stage entrepreneur. So currently, you mentioned we have about 50 people, or close to 60, with a goal to get to over 100 in the next year or two. So we're really growing pretty quick. And as you can imagine, Park City, Utah is a pretty amazing place to be. And so we're getting some really amazing, not only entrepreneurs, but investors as well in the area. So
what does your group invest in? What kind of deals?
Yeah, the big things that we look for right now are, like many people, we have a main focus on Utah. So that is kind of like the part of the charter. One of the things that we do is, and we do it really well, is we meet anybody who applies. If you are a Utah-based company and you apply for funding, somebody will meet with you, which is awesome. That doesn't always happen if you've been in this space for a while. And so we meet with people, and then we filter out the different companies, like we mentioned. So SaaS companies, we look at physical products, we look at medical products, we look at kind of anything. We're kind of a general group of people.
Great. And do you have a particular investment thesis that you go by?
No, one of the nice things that I try to do is keep it pretty generalized so that we can see, just what's happening in the ecosystem. And it also keeps us aware of what's kind of happening, around the country and around the world. There's things that we don't look at. So if it's a real estate deal, for example, but we'd look at real estate technology, for example. So, and pharma is another one that we don't really do as well, just because it takes too long to see the returns typically.
Do you look for early exits in general?
Yeah, the goal I would say is probably, we'd love to see 3 to 5 years. That rarely happens, even though everyone says it. So, typically it's like with everybody, probably like that 7 to 10 year range is the reality. But it is nice when people say, 3 years, this is going to happen. Yeah, okay.
Some say every deal should be able to pay the entire fund or cover all the losses. So how often are you swinging for the fences in most cases?
Yeah, I would say, it's angel investing. So if you're not familiar with angel investing, it's, individuals. I would say many of them are always swinging for the fences because, this is retirement money. They don't really need it. It's kind of more of a hobby versus like institutional investing, where they really are trying to get a return for their LPs. So angels are just kind of, this is my opinion, not Park City Angels opinion, but my opinion is a lot of investors, they want to have that story when they're playing golf or skiing with their buddies. Like, I put in 25K and made 20 million. Like, who doesn't want that story? That would be awesome.
Great. Well, where do you see your group in 5 years from now?
Yeah, honestly, right now we're the most active angel group in Utah. So I kind of see that growing. I think that one of the few things that we're working on is really putting together more of like a sidecar fund so that we can deploy more capital. We can get more angels involved with that as well. I just see us being really one of the big leaders in the angel community of investing. And then our group, people coming there to learn from other angels who've been in the space for a while. And, we'd love to be the first place that startups go in Utah to seek capital. That's kind of where we'd love to fit.
What can you talk about the returns?
We don't really keep that data because it's kind of individualized. So I can't really give you a number there. Like, we try to, but it's just not, I would say it's just terrible data. So I'm not going to share.
Great. Well, let's talk about the state of angel investing in general. How do you see the industry evolving from here coming out of the pandemic?
Yeah, I think we're going to see more cross-promotional and syndicate deals. I know you have a syndicate that you do. So I think that that's something that's going to happen more often. Zoom has made it great. Before, you'd have to drive up to a screening meeting and then drive back usually for a general meeting. And then most groups have some kind of screening process like that. So I think that maybe what we'll see is maybe quicker pitches, maybe 3-minute, maybe 5-minute, because you can get through people quicker. And then that might change. I don't know. But we're seeing a lot more deals happen. Like, we're getting a lot of the angel deals are bringing deals from all over the country.
Oh, really? So what do you think is the biggest change we'll see in the coming months?
There's groups that are getting real good right now. Karetsu, your group. People are just really finding kind of these deals that would never have seen access before, I think, in the last maybe 5 years. I'm hoping in the next little bit, people start marketing better. That's my dream.
Well, do you think angels are going to move to later stage deals? They pretty much were go to market, if not earlier. You think they might go into Series A, Series B type investments at some point?
I don't think so, because I don't think they want to. I think that maybe what we're going to hope is that valuations come down a little bit because they're kind of crazy at the moment. But I think that angels typically are beyond funding someone's idea. I think that that's going to stick around for a long time, especially between the coasts. Maybe people on the coasts are doing something different. And by that, I mean New York and California are funding ideas. But I would say if you're anywhere else, you're waiting for someone to have built something. That's my opinion. I don't know if that's true.
Are you expanding geographically post-pandemic?
No, we're still pretty focused on Utah as far as our thesis is concerned. But what we do allow is if angels are part of our group and they hear of deals from other locations, we will obviously take a look at that because they're probably invested anyway.
Great. And so what do you think about crowdfunding, startup equity crowdfunding in particular?
Yeah, so I think there's a time and place for all of these types of funding sources. My personal opinion is if you can do it without it, then do it without it. I don't know. It's kind of like Kickstarter or whatever it's called. I'm not entirely sure what the value add is personally. I don't know how many angels or whatever are just sitting on WeFunder and looking for new deals, but I could be wrong. I'm not doing it. So,
Okay. And so what are the challenges for the angel investor in today's market?
I think a couple of things. One, and we talked about already, is the valuation. People are able to do a lot more with a lot less. But at the same time, when they're raising capital, they need a lot more capital because salaries are just a lot higher than they used to be. A founder could get away with making 40 grand a year in 3 or 4 years ago. And that's just not happening, especially the rest of that early stage team. So their capital raises are getting higher. Yeah, I say that's a big one.
Great. Well, you see a lot of startups out there and a lot of investors. What's your advice for people investing in startups? What do you tell them to do before they write that check?
Yeah, so one of the big things we like to is just to learn from other investors. So kind of come to a couple meetings, hang out, learn some stuff, ask questions, things and depending on what their industry is, we I think it's good to learn how to pitch. Like you're going to be watching thousands of them anyways. So learn what it looks like on the entrepreneur side if you've never raised capital. Obviously, like some people don't realize that there are a couple different types of investors. Some of them are entrepreneurs, so they've probably pitched before, but others could be physicians or engineers or whatever. And they've never gone through I'm going to say the true entrepreneur process. And so it's actually good to kind of just listen first. And then, if something feels good, gut check, just go for it. You're going to learn a lot through the process, but, kind of hedge your bets. I think there's a book out there. It's David Rose wrote it. You know which one I'm talking about?
Mm-hmm. Yeah.
Yeah. And it's like make 20 some bets, right? That's your goal, so
Great.
yeah, spread the wealth.
Good advice. I'm sure diversification is always key to winning.
Yep.
And then what's your advice for people running startups? What do you tell that founder to do before they go out to raise funding?
Yeah, so there's a lot. So I'll plug the book here. There's probably about 50 different things in the book that the founder should do before they go out. But, circle your local network. Warm introductions are way better than cold. And they don't even have to be that warm. They can be just like warmer than freezing. And another one I would say is practice the pitch. I can't say how often we get people who just put their pitch deck together the night before, and you can tell they just did not put any effort into the pitch itself because they don't think it's that important. And that is far from the truth.
Absolutely. Well, let's talk more about the pitch deck book. What inspired you to write it?
Yeah, so when I was going out to raise capital, my pitch deck that I was using is in the book. So it was really bad. I had no idea what I was doing. And I ran a super seed fund at the University of Utah called Get Seeded. It's basically a grant style fund. And I'm like literally writing the rules, right? Like I would change the rules so it would benefit me. And then I kept losing. I couldn't get funded. And I eventually did, but I think it's because I wore people down. And then when I got involved so after that experience, I went out and tried to raise capital, got turned down for what I thought was a great idea. But we were just selling it in a really weird way. And so when I got back on the investor side of the table, I just started listening, remembering those pitches that I'd seen from the Get Seated days. And then now I'm like, why are these people making it? Like, and others, like, I know, like, Hall, you just pitched. You're freaking awesome. I know your background. I know what the product's supposed to do. I know a little bit about the market. And then you present and it's like, no, don't get it. And then someone I never heard of comes through and then they make it through the screening process. And it just floored me. And so I basically just started kind of like taking notes, like, why was this person moving forward? And so when I ran the accelerator, I gave a talk about like how to put together a pitch. And one of the people in the room is a local angel investor. And he was like, Tim, you should put this into a book. Like, I've never seen it organized this way. Like the way you're doing it makes so much more sense than what's out there. And so I was like, yeah, I don't know, And he's like, look, I'll help you. And he never did, which is fine. But it was just like that catalyst of putting this knowledge that I was just sharing anyways into a written document.
So who is the primary audience for the book?
I would love for, people who help people with the fundraising, like all the SBDCs, teachers who are helping entrepreneur students, maybe angels, VCs, that group. Like, I just feel like anybody who is raising capital or in that space at all should really, it's not a storybook. It's really more of like a 200-page how-to book. And so I don't know. I think anybody who's in this space should just at least take a look at it because it takes and if most people are familiar with Guy Kawasaki's version and they still use that, it's probably the number one search thing. But honestly, it's really flawed in many ways. And so when people follow that script, they're actually missing some important elements. And I think natural salespeople know that. And that's why they don't really follow his method.
Great. Well, when you wrote the book, what surprised you the most?
That someone would buy it. I mean, I just put it out there and it was really kind of a passion project. And I put out the audio, actually, I'll say the audio version, number of sales. Like, it's not doing crazy, but like I've sold almost 200 audiobooks. And I thought that was more of a joke. And I'm the one reading it. So it's like these weird, like, you're like, man, I can't believe people keep buying this thing. Like, it's good, but like, yeah. So anybody who buys it, that shocks me. It's like,
Great.
even though it's good.
So, what was the most important takeaway you found in the book?
As I was writing it, I think the biggest takeaway is how few people understand the problem they're solving and can communicate that. Everyone's really good at telling you what the product does. Like that's actually really easy. But the hardest thing people and they can't figure out how to communicate the problem in the way someone else can understand. And it really is the foundation and sets up the rest of the pitch. That's probably the most shocking thing. And that's actually where I spend most of my time if I'm helping someone with their deck is trying to communicate that.
Great. And so, based on your experience here, what you consider writing next?
I'm really into like more the sales process lately.
Mhm.
So I toy around with this idea of letting go of yes, that's the pending title. But like even pitching, we see, and you probably see this too, where someone is so nervous that they have to get that check. They have to say all the right things. And they come in and pitch and just kind of botch it because either they're running out of money or they're just so nervous. And so I think that's like letting go of that, like that need for the yes is maybe the next thing. Who knows? I don't know.
Great. Well, you did a lot of research for the book. What online information source did you find most helpful?
Honestly, nothing. I built that thing from scratch. So like I said, it was something that I just kind of built through time.
Well, you see a lot of pitches out there with a lot of new startup ideas. If you could start a business tomorrow, what would that business be?
Yeah, I would go back to the business I was trying to raise capital for. It was a mobile gaming company focused on health. And so the way that I would do it is, and if anyone does this and listens to your thing, please hit me up. But what I would do differently is there's a classification of mobile games called like toilet games. So games you only play for a little while and then you kind of throw them away. And I would build that. And with this idea that I had back in the day for health, I would combine the two.
Interesting. Well, in the last minutes that we have here, what else should we cover that we haven't?
I would love to say like people should reach out to people like you and myself. Like if they're raising capital, go talk to somebody who's helped people raise lots of money. We're not that difficult to find, you know, and to be honest, it's better to have more people hear your pitch than not, right? And the other thing that I would say is seek advice, not capital. You'll get a lot more doors open with you when you're like, hey, I just want someone to practice this with. And very few people will turn you down, at least in our experience.
Great. So how best for listeners to get back in touch with you?
Yeah, so the best way is if you want to follow me on LinkedIn, it's Tim L. Cooley, or you can email me at timlcooley@gmail.com. So happy to meet some listeners.
Well, great. Well, I appreciate you sharing that with us today. It's been great information. Enjoyed the book and hope to have you back for a follow-up soon.
Absolutely.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halty Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.